Chinese stocks closed much higher on Friday as the benchmark Shanghai Composite Index rose nearly 3% and the Shenzhen Component Index soared by almost 7%. China's Nasdaq-style Chi Next Index jumped 10%. Major global financial institutions expressed optimism over the outlook for the Chinese equity market after the government rolled out a stimulus package to boost the economy. An official at Goldman Sachs said with the so-called Nasdaq Golden Dragon Index surging 19% in the past couple of days, Chinese stocks should play a part in investors' plans once the U.S. election is over. The Golden Dragon Index is composed of companies that conduct the majority of their businesses in China, but with shares traded in the U.S. Meanwhile, a Morgan Stanley strategist said the CSI 300 index, a key gauge that monitors A-share heavyweights, could see an additional 10% rise in the near term, indicating rising confidence following months of market uncertainty. Well, China's measures to further expand the economy and boost confidence in markets are being watched closely in Africa and the rest of the globe. Now, for more on this, we are joined in London by Edwin Ikhuoria, an international development expert based in London. Edwin, thank you for joining us here on Africa Live. Edwin, China is a leading player in the global economic scene. What is your take on the announcement of these new measures to bolster the economy?
I think the main thrust of these measures or this announcement is really to stabilize key sectors, especially the ones that have been getting real problems, talking about the real estate sector, and of course to boost employment. And in fact, the truth of the matter is that with the fiscal and the monetary policies announced, you see that there is a major trend, a major push to boost liquidity, and of course to also increase the fiscal space by injecting more money for state banks, to fund state banks and capital markets. Of course, this indeed will really increase consumer demand, and of course that will foster investment, which of course would generally push the boundaries in terms of economic growth, as China is always known for. So it's not surprising that they are taking these steps. Again, the market is quite strong, globally relevant, and of course has impact internationally.
All right, Edwin, I guess the all-important question here is how are these measures likely to impact trade between China and Africa?
Of course, if China stimulates domestic, demand, that means that maybe by supporting key industries, that means, of course, with consumer spending, means there will be, of course, more demand for raw materials and for energy products, much of which, again, Africa is supplying. So we expect that to rise. We expect demand to rise when consumer demand rises within China. And of course, what we also see is that it could also create more stable and favorable business environment in China, which means that more companies that are investing in China will still require more, they want to expand their frontiers. And of course, Africa is always a huge market for that as well. So we expect a trade to be boosted. We expect great confidence and greater investments on the African market once consumer demand is stimulated within China.
All right, Edwin, that leads me very nicely to my next question. Now, some of the key measures are aimed at improving the business environment for the private sector in order to create jobs. Now, my question to you is, what lessons can Africa pick in relations to its current economic environment?
There's a lot to learn, and I can tell you that if the most important consideration here, if you see, is that the conclusion from this meeting is that the fundamentals are strong. So there is a need for African markets to also create an environment that will give a stable fundamental for development, for investments, and for all of the things, especially the large market. But the problem with the African market is that it's 1.3 billion people, but they are fragmented into smaller markets. And that is a major difference between the Chinese market and the African markets, because China is one big entity, but Africa, though, is big, but it's still fragmented into small pieces. So we need to think about how to improve that cohesion within Africa so that we can get a real big market that Africa can, harness. That is a lesson they need to learn. We're learning from China in that case. But by also supplying, by putting this business environment, making it friendly we know that the fundamentals are strong, and then it will stimulate investment. The same thing should be learned on the African continent, because if the fundamentals are weak, if you have weak governance, if you have corruption, if you have policy flip-flops that currently characterize, if you have conflicts that currently characterize the African market, then whatever lessons we learn, we're not able to apply. And that is the big challenge with the African market in terms of learning on how China is doing business so that we can also improve our business environment. So it's a tall order, actually.
All right, keeping our attention on the African continent, some African governments are considering to raise money from the Chinese domestic market by floating bonds. Would you say the measures announced to support the capital markets will favor Africa's ambitions to float the panda bonds?
Of course, that is key. In fact, it is something that is quite needed right now. As you know, many African markets are borrowing at very exorbitant prices. So if you can get demand from the Chinese market, Chinese domestic market for African bonds, for the panda bonds, and of course, this will come at very competitive rates, which will be a major alternative for African market who are seeking to raise this fund. So this support to the domestic capital markets in China indeed will create or better increase the chances of Africa getting cheaper investment, cheaper markets in terms of their bonds that they are currently issuing. So we're really looking forward to that really happening, because African countries are really looking for alternatives as we speak.